Hi all, good morning, good afternoon, good evening. Welcome to my channel What's Going on India. So as there were a lot of IPOs that are coming into market, and specifically we can see two payments banks coming and competing the IPO segment right now. So I just want to pick up this topic to explain. I don't want to give any opinion on Fino or Paytm payments banks, but I want to explain these concepts like what are these payments banks versus small finance banks versus banks, so that we know what we are trying to invest and whatever decisions we are taking, whether they are right or not. So let's step deep into these concepts. So RBI has introduced these payments banks to support the lower tier customers, like who are currently, not having the facility of using banking services. Using technology, reaching such customers is the concept of these payments banks. Small finance banks is, kind of a bank that is uh, more working as a bank, but it cannot sell all products. Like it cannot like too much aggressively earn money, from customers. It can earn up to some limited scope, and it can turn into a bank after some kind of rules and performances. And banks are like, anyway, we know very well, so these are like the key institutions which can lend money to anyone and any institution by following the RBI guidelines. Now payments bank, it can be opened by retail chains, it can be opened by telecom companies, it can be opened by NBFCs, and it should require a minimum capital of 100 crore rupees and 75% deposits in government banks. So if you look at this statement, right, so whatever money these payments bank earns, they can put that money as an FD or in any instrument into government banks as an investment, and then government banks will give them money back. So 75% is government banks, maybe like SBI or Canara Bank or something. So these banks, payments banks, actually the concept of RBI is take money from the customers who don't have the facility of banking, like not take as in take money. It's like collect money from them and move that money into the organized banking system. So that is the concept of this payments bank. Small finance bank can be opened by anyone who has 10 years experience in banking and financial services, and it requires a minimum capital of 100 crores. And now coming to banks are like full length entities. So that is the difference between these banks. Now if you go to uh, what they must do, okay, payments banks should have 26% of the investment should be by Indian citizens in these payments banks. It can get listed if the net worth crosses 500 crores. So if the payments bank's net worth crosses 500 crores, then only they can go for an IPO market. So whatever payments banks that are coming today into market, Fino and Paytm, they both have crossed 500 crores market. So that's why they are coming into IPO. And then 25% of branches should be in unbanked areas. So they should create if at all they are creating branches, 25% should be created in unbanked areas. Bank should be technology driven. Like as you know, this Paytm, right? So they are heavily technology driven, and they boast out that we are technology companies, not basically banks. But the concept of RBI here is to reach the low end of people by using technology. So that is the premium concept of these banks. So use more technology and less investment. So it should be, um, what we say, asset light business, asset light banking system, and risk light banking system. So that is the concept of this, and it will not have much earnings also. So if you look at revenues, they also will not be like too much. So that is the concept of these banks. And small finance banks are more like, acting like banks. They can turn out banks like based on their business model and all. Only thing they cannot do is that they cannot give insurance, they cannot sell insurance products, mutual funds or something of their own. So they can still sell mutual funds, insurance, and other products, financial products from other banks or NBFCs, but they cannot sell their own products. So that's the concept of small finance banks, and they cannot lend loans more than 15% of net worth of any customer or business. So that is another way to save these banks from the NPA problems. So they will not have much of NPAs, the small finance and Paytm or payments banks. So they will not have much of the NPAs. Now payments banks, what they can do is they can offer internet banking services. They can offer uh, they can sell mutual funds of other banks, other institutions. They can have ATMs. ATM services can be extended for the other banks, and they can function as a BC of other banks, and they can sell uh, forex. So that's the payments bank. So they cannot do any other things apart from these things. Okay, they cannot open their own subsidiary and all those stuff. So they cannot make anything apart from these. So small finance banks can sell forex to customers, collecting forex reserves, and they can maintain some forex money. They can open in outside India also branches. Like you can take your dollars and convert them into rupees in any small finance bank. They can sell similar to this. They can sell mutual funds, insurance products of other instruments, other players in their banks. They cannot create their own products. Now payments banks cannot offer credit cards. They cannot issue credit cards to customers. They cannot issue loans to customers. They cannot issue cross-border remittances. They cannot accept NRI deposits. These are like the money minting business segments, right, for all the banks, which they cannot operate. So you can understand the concept of these banks. These banks were solely created to serve the lower tier of people. They were not created to make money. Okay, so as an investor, one should remember what are these banks are up to. And then small finance banks extending large loans, floating subsidiaries, they can. So these are like somewhere they have a scope of earning money by lending loans for a like net worth of 10 to 15%, like I explained in the previous slide. And that is like quite possible that they can easily recover it. They will not have much of NPS, and they can lend money and they can recover money also. So that is the advantage with small finance. When they cannot sell their own GI, general insurance, health insurance, life insurance, mutual funds, and all these kind of financial products. So that's what these guys can't do. Banks are like very advantageous. Like it requires heavy investment as well. They can operate all type of accounts. They can lend to all the institutions, individuals, and they can manage and sell financial instruments of their own. So these are all possible by all these banks, and uh, I will say this is an advantage and disadvantage. So they give a lot of loans. Like you can see the story of S Bank. They have given a lot of loans, and then now what is the state of S Bank? It is trading at 11 rupees from its all-time high of 800 rupees. So that's how they can turn out even as well. So there is high risk and there is a high reward also in the banking business. And yeah, so these are the advantages with banks. Now these are the different payment banks, small finance banks, and banks in India. Airtel Payments Bank, Fino Payment Bank, Paytm Payments Bank, Geo Payments Bank, India Post Payment Bank, NSDL Payments Bank. In these, I have seen the study. Only Fino, Paytm, and Geo are successful in making these getting positive returns. And the small finance banks almost all are looking good. I personally like this Equita Small Finance Bank. And then banks, anyway, you all know about all these banks, right, which are in India. So that's how these were categorized. If you look at the banks, right, most of the banks have diversified their insurance and mutual funds and general insurance as a subsidiaries. They have floated into the market already. HDFC, ICICI, and all major banks. In the private sector, I don't want to talk about public sector banks because their mode is different. So in the private sector banks, Kotak Bank is the only bank which is like having all the subsidiaries under the Kotak Bank, which is trading in the market. So that's why I like Kotak Bank as an investment option. Uh, As we know, the life insurance companies, you can see the pricing of those companies, the mutual fund companies, etc. HDFC, AMC, ICICI, Lombard, ICICI Pro, HDFC, Argo Life, all these are like uh, trading at heavy price multiples compared to the bank PEs. So that's why I feel Kotak Bank is a better investment compared to these banks. And yeah, so that's the concept, guys. If you like it, please like, share, and subscribe. I think this helped you. So before applying IPOs, right, these are my views for Fino Payment and Paytm Payments Bank. So these were created just to help the people and take money from unorganized sector to organized public sector banks. So that is the concept of these banks. The more they develop, the more these public sector banks will earn money. So that is the pure concept of this. I don't see any money earning or revenue generating opportunities, profit generating opportunities in payments bank. They can increase in revenue, but profits, I don't think they grow at a scale more than the FT interest. So better you invest your money in FTs than investing in these payments banks. Until and unless you feel some moat, like Paytm has a moat, so it is a different bank compared to Fino. So like that, you observe your own based on your own understanding and you do your investments. Thank you.